Guess what today was? Fed
Oh.
update.
Fed update. So for anybody that's actually keeping track of the Fed, they had another meeting today. So
We wanted to kind of give you some of the news and the stuff that came out of that, and basically
Nothing's
kind of
changed. So the last Fed update, I think, was back in December of 24. So it's been, 4 or 5 months now. And predictions were that we didn't know how many more they were going to have. They met today, and like Lori said, everything's, unchanged, which means nothing's really going to change right now. They're kind of just being cautious. And
kind of a wait and see. I think that maybe they might, do maybe one more Fed cut, but I think they're really just trying to wait and see what goes on. I mean, we are in a very volatile market, not mortgage rate market, but a lot going on with a new president in the office and some of the stuff that's going on with tariffs and things like that. So there's multiple things that kind of affect, mortgage rates. So
right. And I think one thing to notate is whenever the tariffs, trades, things happen with Trump, a few weeks ago, or maybe I'm trying to think what today's even, we saw rates jump up really quick. So sometimes when people hear about the Fed's meeting, they think that that's going to completely directly affect mortgage rates. And when in fact, there's so many other economic factors that do. So mortgage rates itself have actually come down this last month. So we are trending back down like we were before Trump's announcement. So I think it's not surprising what happened, but it doesn't mean that mortgage rates are going to stay right where they're at either.
Yeah.
So.
And the other thing that is there's kind of what Ashley and I have been doing a lot of planning the last 2 days. And so we kind of ended our day here, and it was kind of perfect. And we wanted to get the information out to you guys since the Fed did meet. But there are several things that really kind of affect the mortgage rate itself. And inflation is one of those. And of course, everybody knows that, they've been making some cuts to try to get inflation down. And when inflation come down, rates will come down. But then you've got other factors that are making it kind of come back up. And then one of them is the Federal Reserve policy, which they came out today and kind of set the new policy for the next meeting.
Yeah, you got the 10-year Treasury, the bond market, that'll affect mortgage rates. I think we were looking to was the first quarter, there's a 2.4% growth since the previous one. So there's things that are helping rates, and there's things that mortgage rates in particular, and then there's things that are going to kind of help equal things out. So market conditions.
Yeah, that's a big one. What's going on with the market, the demand, the investor, investor reactions and things like that to it. And then again, we talked about, is the tariffs and all the stuff that we're seeing that's causing, other people to kind of think, oh, what's going on? It's not a good time to buy. Is it a good time to buy? But we did want to kind of come on here and just let you know that it's kind of status quo. Let's just wait and see. That does mean that we're still in a healthy market.
Yeah. I think everybody's worried about a recession, things like that's going to be kind of the trend we're going. But everything we're reading, I don't think that's something to be fearful of. And anything that goes bad, you always know it's going to get better, and people are still buying, and it's still good out there. So
yeah, we're here as we kind of wind up and we get into the end of school year, and we're going to start getting our busy season here for us in mortgages. A lot of times people move when the summer happens, and so if you want information or you want to continually reach out to us, give us a call.
Yep. All right.